Hello traders. Welcome back to another episode of the Traders Show. This is episode 13. We're going to answer one question that is frequently asked by very many people, both people who are interested in trading and people who've just randomly visit us at the office. So the main question is, isn't this guessing, or rather, isn't this more of a gamble rather than something that is sure? Or that's one of the things that many people keep on asking when they come to the office. And if you have taken enough time to study markets, I'm sure you've come across very many speculators who compare trading to gambling. One of the common ones is a man called Bernard Baruch. He lived in the 1930s, 1900 eras. He was a millionaire by 30, and one of the things he said was, if you're willing to study market prices like a medical student studies anatomy, and in addition to that have the sixth sense of a clairvoyant and the cool nerves of a gambler, then probably you stand a ghost of a chance of making money. His point was, trading is difficult. It's not something easy, and many people can't go through the process of mastery. They simply can't be able to discipline themselves enough to understand how the game works for them to succeed in the markets. Anyway, our main thing today will be talking about why trading is not gambling. We belong to the category of people who believe that trading is not gambling, and we do believe there are very many reasons why, as much as trading may be similar to gambling, there are fine differences as to why trading is not gambling and why some people succeed and others fail. So simply we can sum it up to asking the question, is it all a matter of luck, or is there some element of skill? That's what we're really tackling today. Other than that, Lawi, how was your week?
Greetings, traders, listeners on YouTube and all other channels. It's the 13th episode, so we are glad to be here back again to share the little knowledge we have over the 5-6 years experience we've been trading markets. And today we are tackling a very important topic, gambling and its relation to trading, and why most people believe or think trading is gambling. Most beginners are doubtful of the business. They think it's very, very similar to gambling. They have very similar characteristics to gambling, but also, as Ken has said, they have also very, very fine differences between the two. So today we're going to tackle that, and we'll share and maybe change mentalities of most of you guys who think trading is gambling. We will show you why it's not gambling, and a few ways in which you can actually make money in trading. And okay, for us, we are not professional gamblers. We've not gambled. Okay, me, I've not gambled. Not even as a retail. There's something like retail gambling. So I'm not maybe like a retail gambler.
Institutional gambling. Not really.
Yeah, so I think I've bet only once or twice back in high school, or just after high school. But so I won't talk much about like gambling, but I will show you. I'll talk from a perspective of a trader who knows some nuggets from gambling, because I've also read gambling as I read trading, because there are also some books on trading and gambling, gambler's mentality. Yeah, so I'll try and share what I have. Other than that, from markets this week, it's been a pretty good week, up a few percentages, some good trades here and there for the week. So I'm running one trade right now. Okay, no, no, the trade is done. Okay, just as I was coming to the podcast, I found the trade done. It was a GU long. Yeah, so let's see how the week will end. Can you start from the gambling perspective?
First of all, market update. Yesterday, we've seen some magic moves on gold. Up 1%, down 1%. So nothing really happened. Not a big change in the markets. Bitcoin
like
still
gold
moved
up about 300 pips, then dropped about 300 pips.
Yep, that's up a percentage, down a percentage.
Yeah, man, like that's a lot.
That's a big move.
Yeah.
So if you are, I was in that move, but I never made any money. I was not very keen to exit the position. So it's more of a break-even trade. So not really a very big loser. So once you're executing a trade, you normally have your targets. You either make money or you lose money, or it's a break-even trade. That's how I categorize my trades. That was one of a break-even trade. So I'm still watching gold to see what will happen. I still expect a breakout to the upside, but we cover that in other sessions. So today we're going to talk about gambling and trading. And I think for me, the starting point is I'll start off from a trader's perspective, then compare that to gambling. So from a trader's perspective, there are three theories which I think can try to explain why trading is so difficult. One is the random walk theory. So the random walk theory is basically the idea that the movement of prices is random and no one can be able to capitalize on that movement to make money since it's random. That's one. I disagree with that. I don't believe the movement of prices is random. The second theory is the efficient market hypothesis. The efficient market hypothesis argues that all information that can give you an advantage over the price is already baked into the price. You therefore can't get any advantage when you're trading the markets. So basically, it's very hard for you to beat the market so that you're using information because the information you have is already baked into the price.
Yeah.
And then you have the third theory, which is a recent theory that has been brought about by psychologists. And that's the behavioral finance theory, which argues that people, when exposed to uncertainty and risk, tend to make decisions emotionally. And that can give you an advantage in your trading markets if you understand the irrationality of human beings.
True.
Those are the three theories. I tend to lean more to the behavioral finance theory. I do believe there are some very good opportunities which arise out of human irrationality. The elements of fear, greed, panic offer you some very, very good opportunities if you're trading.
Yeah.
But I also believe there exists some patterns which keep on repeating in the market. And if you can be able to recognize those patterns and stick to trading those patterns, then you have found a cash cow, which is the stock market.
Yeah, true.
So that's where I'll start. In gambling, on the contrast, in gambling, I do believe there are two types of gambling. There's the chance-based gambling, those people who pick lotteries, those people who try to bet on the jackpot in Sport Pesa.
Yeah.
That's purely chance.
Sport betting.
Exactly, sport betting. But I feel like there's skill-based gambling. The people who play poker, the people who play blackjack. Those are people, Russian roulette. Those are people who...
Russian roulette is risky, bro.
I know it's risky, but I have understood like it has some element of skill. Because I remember there was this one time when someone from the casino came to the office, you remember?
Yeah.
And this person explained to us how some people are consistently making money as gamblers, and some people are consistently losing money as gamblers. Yeah. So I think that's where I'll start for me. I do believe that trading is more of a skill rather than luck. And one thing that can show us that trading is a matter of skill rather than luck is there are people who consistently make money
in markets.
For example, take the example of Jim Simons. I think Jim Simons is one man who's made money over 30.
Who's Jim Simons?
So Jim Simons is a hedge fund manager. He started a hedge fund called Renaissance Capital. He's averaged about 60% return over the last 30-40 years annually.
Yeah.
There's Warren Buffett. He's averaged about 30% return annually. There are the likes of Ray Dalio, the likes of Paul Tudor Jones, the likes of Ken in the next 30 years will average good returns. But all these people are consistently doing something that is working in the markets. So I believe that for such people to exist, there is some element of skill rather than luck in the markets. I don't believe you can be lucky for 40 years. That one doesn't exist. It doesn't simply exist for me. So that's one of the things that I can compare between the two.
Okay. For me, I think it's important to, just as I've said, there are different forms of gambling first.
Yeah.
I think there's gambling that you shouldn't even try. And there's gambling that you can make a career in.
There's gambling where your odds are highly staked against you. Okay.
And that's like sport betting, like betting on one team every day. Something that will need you to, like the odds keep changing every day, you see?
Yeah.
It's not easy for you to form a consistent edge around it.
Yeah.
Because today you'll be betting on Manchester, tomorrow it will be Barcelona. So such forms of gambling or picking lotteries are not like you can't form a career around it.
Yeah.
But I've come to realize that they are professional gamblers.
Yeah.
Those who you say that they play skill-based gambling.
Yeah.
And for that, you'll come to realize, I think there's a very, very similarity between pro gamblers and pro traders.
Mm-hmm.
One is that they take so much time to develop the skill.
Yeah.
Like for gamblers, your skill, okay, for skill-based gambling, which you're not playing against a house.
Yeah.
You're playing against competitors. Let's say
Mm-hmm.
I'm playing against you with poker, like, so we're picking cards. That is something I can easily improve my skill on noticing your emotions,
Mm-hmm.
noticing like how you react after dropping a card, after picking a bad card. I can easily like learn human emotions, facial expressions. So you
Can understand the psychology of the game.
You can easily create an edge around that.
Mm-hmm.
Yeah. So there's skill-based gambling, but also it takes so much time to be a pro skill-based gambler.
Mm-hmm.
Another thing also is they both need money.
Yeah.
Before like gambling became what it is right now, first of all, it was illegal.
Mm-hmm.
Then
I think it still is in some countries.
Yeah, of course, in some countries it's still illegal, but in the US, in Kenya, but okay, like where we know the main gambling hotspot, Las Vegas, it was first illegal.
Okay.
Then the government saw that there's so much tax coming from this stuff, so they legalized it.
Okay.
But also it was just for the rich. You see, like only people with let's say $1,000 could go to the casinos. Like casino entries were expensive, so like only the rich were allowed to bet. So, but as betting has evolved, it has become even easier for many people to get into betting. Before, like betting became this mainstream, it was a hobby for most people, for the rich.
Yeah.
Because people used to bet like you remember like the story of was it Michael Jordan? You remember the way he was addicted to play golf, and then he'd bet millions of dollars with his friends. That's still gambling.
Yeah.
So, but it was a sport for the rich. So like they wouldn't mind losing that $1 million because they have like 100 million. You see.
Okay.
But now gambling, the same mentality came now to the mainstream public, and they showed them that you can easily multiply your small money into big chunks
money.
of money. Exactly. So people are now like right now you can easily open a SportPesa account and deposit 50 shillings and bet.
Yeah.
And put an odds of about 100.
You can choose as many games as you want.
Yeah. So like,
and there's a high chance you lose.
It has become so easy for people to bet. Betting, you don't even need a smartphone. Kuna hadi easy USSD code.
Oh, the
Kabambe ones. You can easily bet. So, as we know, capitalism. People saw this, a business idea. You see, so it became now from being a hobby for the rich to being a mainstream business. Business for in the world. And another thing, why I believe trading is so similar to gambling, in a way, is that trading is a rule-based skill. But if you break these rules, you're already gambling your money in markets.
So you can gamble in the markets.
You can also gamble in markets, yeah. And there's this clip by Warren Buffett, which is very interesting. You should watch it. I think we'll put it on this podcast somewhere. Warren Buffett says day trading is basically gambling because 99% of those people don't know what they're doing there. So what's the fact that you lack the knowledge of playing stock markets, day trading already puts you at a disadvantage of having that edge. The moment you don't have an edge in markets, you're gambling.
Lost.
Yeah. So it all boils down to taking that time to develop that edge, that skill that will allow you to beat the market and beat the house.
Yeah.
So for both, okay, for gambling, I think it's not like it shouldn't be a you shouldn't look at gambling like a get rich quick scheme. And I think for those people like the guy who came to the office to tell us about casinos, the guy who works in the casino, he told us like most people coming there are very, very rich people.
Yeah.
Like they come with bodyguards. Like there's private rooms. So like it really shows you how this business is not like for you trying to take your 1,000 shillings, just same as trading. Don't come to markets ama to gambling. Okay, yeah, a gambling, the reason it's gambling is basically because you're playing odds.
Yeah.
Probabilities. Same with trading. You're playing odds, probabilities. So, but the thing with gambling, and that's why I believe even gambling is harder than trading, is it's so hard for you to tweak the edge to your side than in trading. In trading, let's say we both have 50-50 chance as we start, both gambling and trading, of winning. But now for gambling, you actually have a less a probability.
Over time.
Yeah, over time, because the house will always win. In 10, there's this analogy of how the house makes money. It's they pay back only 90% of all deposits. So that 10% is theirs. So let's say you play 100 games. You'll win 90 games, but 10 games is theirs assured. You see, so they came there with nothing, but they're winning 10 games already. So that 10%, that 1% is what gives the house an edge. So for you as a gambler, as a gambler in a casino, you actually have a less chance of win, like a probability of winning. Let's say 40. In trading, as you start, also you have a very, very low probability of winning. So that's why you need to develop the skill, and that will now come down to taking time to harness the skill, like to know the ins and outs of the business, like understanding where you'll get your edge in markets. Is it in risk? Is it in psychology? Is it in system development? So then you can easily tweak the odds to your side from 50 to 60, 70. So the moment you've tipped the odds to your side, it doesn't have to be in terms of hit rate. You can tweak the odds to your side in terms of position sizing, risk reward, hit rate also.
Yeah.
So there are multiple ways of tweaking the odds to your side. So if you get that edge of how you can tweak the odds to your side in trading, it gives you now the higher probability of winning, and that's why we believe trading is not like gambling. So like the fact that in gambling it's so hard for you to tweak the probability of winning to your side than in trading. That's why I believe if you think gambling is easier, just come and trade. Like you already have a high risk tolerance that can be comfortable in trading. So like because we already know it's so hard for you to be a professional gambler.
Yeah.
I think I know more professional traders and more professional gamblers.
Yeah.
And more consistent ones actually. Okay, we've had stories of like today I was telling you the story of the guy who gambled $50 to $40 million. That's 4 billion shillings in 2 years. Then
he lost it all.
In less than 5 years, he had lost the $40 million. So for me, I think I've seen more consistent traders than more consistent gamblers. But also, I think I've seen like people multiply lottery so much. Like there's this woman in the US. What was her name? I can't remember, but she had a lottery.
She did it once though.
Yeah, once.
Okay.
She hit a lottery of, I think it was $100, and she got like $870 million.
Yeah, I think I've heard that.
It's the biggest lottery, I think. Yeah. So there are people like that, but
that's luck.
Yeah, that's luck. That's pure luck. Yeah, so it's not skill. It's pure luck.
Skill, yeah.
Also in trading, like the element of luck is very, very small. Very, very small. Like there's luck in trading, like depending on positioning of where you entered markets, not in terms of a trade, but your timings of let's say starting to trade. Let's say how can I put it? Like you were just positioned at the right time for something.
Really? I do believe, personally, I believe at the level of one trade, luck can help you, but you can't survive a whole year making money on luck. Yeah,
of course. Okay, my point is not even in terms of trades, like 1 or 2 trades.
Okay.
In terms of like your access to like to the industry. You see, like let's say for you, don't you think like you were lucky to start trading and give it your whole at 18 or 19?
Okay, knowing it at that age.
Yeah.
That was an advantage, yeah.
Yeah,
exactly.
That was an advantage. There were so many people 19, 18 years old in Kitui, Kitale, Machakos who didn't get that. You see?
Opportunity.
Yeah, that opportunity, exactly. So I think the element of luck in trading is very, very small. Like very, very small. The rest boils down to your hard work, having a solid career plan. I think in gambling, most people don't even start by forming a career plan. Kwanza hizi gambling hizi tunajua hapa Kenya.
Unaanza tu.
Ni ya kusurvival tu, ndaka tu de ado tu ya weekend.
Kidogo tu.
Weke tu so upate 2,000.
Nakupata.
Like just an order of about
1 is to maybe 10 or something.
It's 20. Like how do these people? Those odds are high.
Yes, unaweka nani to score, nani the game to unaweka vitu hapo.
Those odds are high. Like if I get those odds in trading, because my odds in trading is like 3 or 2 only.
Yeah, and if you try to explain to someone they can make money like that, they don't buy that idea.
Like how?
That you can focus on making money in the long run rather than hitting home runs.
Yeah, of course, yeah.
Many people insist on hitting home runs rather than focusing on the long run.
Yeah, home runs also are luck. Also in trading, you'll have those lucky trades that will give you home runs. Yeah, like
But now I think in trading, those opportunities will arise out of human irrationalities. For example, last year you would have made a home run if you bought oil.
Exactly.
But that is an opportunity that came about out of panic, fear, and irrationality in people, because there's no way oil could be trading less than $10.
Yeah.
That was a very good opportunity which came out of human irrationality, right? And you'll have made a lot of money if you just capitalized on it. That was not even a matter of skill now.
True.
It was a matter of, were you positioned at the right place at the right time, and did you understand that this is an element of panic, which is also some element of skill if I think about it. Now, on the flip side, on gambling, such opportunities don't exist. It's pure luck.
Yeah, true.
It's pure luck. Like there's no day that CG Messi will do some irrational things and then you can capitalize on it. Nope.
Yeah, true.
So such things don't exist. Now that's one of the differences I actually think exist in the market. And there's this fallacy, especially on the retail side of trading, that the markets are gamed by some big institution or some big hedge fund, which can corner the market and
maybe a long time ago, like when Jesse Livermore was trading back in the 1930s.
Exactly.
The manipulation used to work.
Right now, hedge funds lose money.
Yeah, the liquidity right now is too much.
In the 2008 financial crisis, many hedge funds lost money.
Yeah, banks closed.
For example, Lehman collapsed.
Yeah.
Bear Stearns was almost collapsing. It was acquired at $4. So that was one example whereby you could see the house didn't have any advantage.
True.
The people who you think are the house, there was no house.
Yeah, there was no house.
Some people were losing, some people were making money.
Exactly. And that's the like one main difference about trading and gambling. In trading, there's not really house.
Yeah.
In gambling, there's a house. Like in casino trading, there's a house.
Yeah.
At SportPesa will always they have like, let's say, almost 10 million bettors there.
Okay.
But in those 10 million people, they'll always become the winners.
SportPesa.
Yeah, you'll never listen a day at SportPesa went bankrupt from paying people.
Exactly.
Yeah.
Exactly.
So the house will always win in trading. In not in trading, in gambling. In trading, it's a zero-sum game.
Yeah.
I win, you lose.
For me to win, you have to
I
lose.
win.
Yeah.
Exactly. So, and it's millions of us winning, losing, not me against one house.
I get.
See, so it's so hard for you to even know who gained it. You see, it just went to the market and liquidation took it to someone else. So it's like that factor of like there's always a house in gambling. There's always an entity winning against you. That's I think that thing really lowers your probability of being a successful gambler.
Yeah.
And that is why most people eventually lose money, because you'll make a few home runs here and there in gambling,
but you won't be able
to
sustain.
At the end of it all, the house will
win.
Yeah, will win. So it will always
it's a zero-sum game.
Yeah, it's a very, very zero-sum game. Yeah.
Yep. So those are fine differences. Another thing that I think we can talk about is the element of edge existing when you're trading and edge not existing when you're gambling. Okay? So Lavi has been left by a trade. So when you're trading, you can develop an edge. Like you said, you can develop an advantage. For example, for me, I know patterns that I'm trading statistically have a certain hit rate, have a certain occurrence frequency, have a certain risk reward ratio.
Yeah.
Like I'm not just guessing what I'll buy and sell or where I'll buy and sell. There's a certain pattern that I'm looking for, and my job is to recognize that pattern. So it looks like more of out of the random movement of the market, at least mine is structured. I do believe that there's a structured movement in the market, and that's what I'm looking for.
Yeah.
So I'm not always trading.
True.
There's something that has to happen for me to just press that buy button or press that sell button. Now, on the flip side, when it comes to gambling, there isn't such a thing.
Yeah.
Like you can't decide, last week unajua Messi alifunga, sasa hii wiki atafunga pia.
Yeah, true.
It's pure luck. Or you can't say this horse won last time, so it will win this time. It's pure luck. You get?
Yeah.
So that's one of the things. The second thing is, but now that one, I'm not sure if it's a similarity or a difference, because I feel like professional gamblers will do that just like professional traders will do that. The assumption that you have to make money every day is one of the reasons why very many people lose money in the markets.
Yeah, I think also pro gamblers know that.
Exactly.
Yeah.
So the idea is for you to make money as a trader, you have to learn when not to trade.
Exactly.
You get, you really have to know, okay, these market conditions are not very good, the setups are not very good, and so I won't be trading. I'll be out of the markets, I'll be watching other things, I'll be doing other things, or I'll be waiting for a certain setup to align up for me to trade. But the idea that this is a day job, that every month you have to hit a certain percentage, like I always hear people say, I'm looking for this percentage. Often trading doesn't work that way, and I'd love to do some research to understand this. I do believe that 20% of the opportunities will make for you 80% of your cash. So not very many opportunities will be very, very clean for you to make some good money on them. Some market conditions are very tough for you to trade, but some market conditions are very, very good for you to trade. So you really have to know when to press on the accelerator, when to stay out, and when to take some little risk just to test the waters and to see whether things are working in your favor. If you're spot betting, I don't know how you do that.
And I think that's a very, very important point. Also, it comes down to addiction. I don't think trading is addictive. Like, you can't be addicted. It's dangerous to be addictive in trading.
Yeah.
Like, it literally just takes you to over trading immediately. The moment you have 6-7 trades running
in a row.
But you have to be on your job, you see.
Yeah.
But you have to be trading actively.
You have to.
But I don't think you can be in a casino just chilling. I'm waiting for. You'll be there actively trading, exchanging chips. You see, like.
Yeah, you can't be waiting for the perfect game.
Let me wait for a perfect game. It's coming. So, like, gambling is very, very addictive. And there was this research which shows gambling is more addictive than heroin and alcohol.
Yeah.
Yeah. So it's, even though it's not a drug, it's more addictive than the worst drugs on earth.
Why is it like that?
One, I think it's because the same thing that comes to trading, which is revenge trading. Like, you always want to recover your money back in casinos until your last cent is gone. To enter home.
Okay, but the main reason why it's addictive, so addictive, it's just like trading. Most addictions have either positive reinforcement or negative reinforcement. Meaning, for example, the reason cocaine is addictive is because when you use it, there's that high that comes with it. So that's positively reinforcing. So once you're not high, you feel like you should take it.
Exactly.
So it's addictive. But now things which have both the element of positive or negative are more addictive. Why? Because you don't know whether it's pain or pleasure that will follow.
Oh, yeah, true.
You get one, you know it's pleasure. The other one, you know, maybe it's pain. But now the uncertainty of whether pain or pleasure will come makes it more addictive because you don't know which one will come. True. So you just keep on trying, and before you know it, you're addicted to the game. You get?
Yeah, true.
So that's the main reason why
that makes sense.
Why trading and sports betting can be very addictive.
Very addictive.
Because you don't know whether this trade is a loser or a winner.
Yeah, true.
At the point of execution, haujui. Sasa utasema tu acha tu niichukue.
There's a similarity by the way between trading and gambling.
Yeah.
The uncertainty is the same.
The same.
Yeah.
Like, you can't know which bets will work, which ones won't work.
Will work, which ones won't work. So I think like there's a thin line and still a huge difference between the two.
Exactly.
And that's why also if you look just at the demographics, gamblers are so far away from Wall Street. Las Vegas is so far away from New York.
Yeah.
See, so like those two people are in very, very different
worlds.
Worlds. But also, there have been very, very good gamblers who stopped gambling and actually now became consistent traders. Like they made now money in markets. Yeah. So I think also like gambling can give you a few nuggets. Okay, nuggets and create a few like because I believe personality comes from your experience. So like it will give you some personality of a trader, that risk taking, like that not doubting yourself, that pressing the button, you see. So it can help you like as a trader in some way, but also I think it's important for if you have gambled before, if you are a staunch gambler, then I think you have a chance in markets. And that joins from what Bernard said. You have to have that
cool nerves
of a gambler.
Yeah.
So it also helps in trading in a way. So if you've been spot pesaring pale,
try your luck in trading.
Yeah, try your luck in trading. At least you can form a career here. So like stop that gambling. It's so hard for you to create an edge in that business. It's a business that actually very, very few people understand it. At least there are very, very many books on trading you can read.
Yeah.
There are very, very few books on gambling, maybe, or maybe I've not done research on that, but I'm sure. Okay, me personally, I know medicine, yes, but I think the research done on markets is intense. So I don't think like you can at any point compare this business to gambling, which like, in gambling, I think it's you just walk into a casino, apprenticeship, you see how these people are playing.
And then you decide to start.
Like me, I've taught a friend of mine who didn't know poker in one game. Even inachezwa. You can drop this, you drop this. I'm count cards. If this guy gets to 24, mbele yako, I'm a win. Like there are different forms of poker, but teaching it is so easy.
Yeah.
Again, trading, we have a course that takes 3 months
for you to learn.
Yeah, and that's just a course. Then you need to go
and practice
on your own. So I think that mental framework of a trader is what like most gamblers now don't have. Like most people have that. Most people have a gambler's mentality even when they come to trading.
Yeah,
and that's why already, as you say, if you break a few rules here and there,
you're done.
You're gambling. So like you just have to know these rules and stick by them. Know when not to gamble in the markets, because actually for me, I think that is one way of me trying to avoid bad trades, of me trying to avoid bad decisions. I look at that decision and I tell myself, this is a gamble you're making. No. It's not statistical. It's not from your practice. You see, then that thought just makes me stop doing that. So, knowing this characteristics of gambling can help you avoid some great mistakes in trading, like revenge trading. That thing, I think it comes. Gambling has that thing way stronger than trading. Like
you feel like the market owes you something.
I remember that story of the same guy who came to the office. He told us about that Chinese guy who he finished the tender here in Kenya, got 80 million.
Then he started gambling.
Yeah, he went to a casino in Lavington, started gambling. He in one night akamaliza pesa, bro. 80 million shillings gone in one night. No ticket fee. The casino had to pay for his ticket back to China. And that's a real story, man. So it shows you how
dangerous.
Yeah, how dangerous that game is. Like it's so hard for you to beat the market. So for me, I just think I can never preach for anyone to like go into gambling. For me, I think I'm a very much believer of financial markets. They're the biggest markets in the world.
And I think regulated. That's also another thing that I'd talk about is the difference, which is the fact that the markets are about 10 trillion, 15 trillion, 20 trillion dollars industry. Yeah. But I don't know how much the gambling industry is worth. I think there is a lot of money being invested in different assets, in buying gold, in buying silver, in buying currencies. And there are reasons for these markets moving. That's another thing that many people don't understand. For example, there's a very high correlation between assets being in a bull market and interest rates being very, very low.
Yeah, true.
There's a very high correlation between the economy being in a recession and the company performing in a certain way. Because, for example, think of a stock. A stock is basically ownership into a company. A company has value, and how the company performs is dependent on how the economy is performing. So, what does all this mean? It means when the economy is doing well, there's a high chance the company will have discounted earnings, and once the company has discounted earnings, it means the share price is likely to go lower. So there are reasons why markets zig up and down, only that we use different tools to look at some of the reasons.
Yeah, true.
There are technical analysts who believe in studying the past to understand what is likely to happen in the future. There are fundamental analysts who believe technical analysis is bullshit, and the only way you can make money is by use of information to understand how the economy is performing and what you think will happen in the economy. Then there are sentimental analysts who believe when everyone is bullish, you should be betting on the bearish side. So I think the interpretation of markets is what is different. But by the end of the day, there are fine reasons for certain things happening in the market.
Mm-hmm.
The markets don't just zig up and down. Like
Yeah,
gold won't just wake up and start moving higher, or a certain asset just wakes up and starts moving higher.
There's a cause-effect relationship.
Exactly. That's the right word. There's a cause-effect relationship. Understanding that cause-effect relationship will give you an edge in the market.
Yeah, true, exactly, yeah.
You get, many people don't invest so much time in understanding the cause-effect relationship, and they just open accounts and start trading. And that's why I think the average person does not stand a chance in making money in the markets. It's a very competitive game. There are people who have invested millions of dollars. There are people who have invested time.
Yeah.
The people who have invested energy, and all these people want is your money.
True.
So if you don't take care, your money will be paying someone else.
Yeah.
So understanding the cause-effect relationships, the signals that you normally look for when you're trading, the psychological implications of trading, because trading is a random game again. At the point of execution, you can't know which trader is a winner or a loser.
Yeah.
Having the necessary mental framework to operate or to work in such an environment will need you to at least adjust some of the beliefs that you have as a person. And if you're not willing to put in that time and energy, then you may end up never making it as a trader, claiming trading is a scam and
it's gambling.
It's gambling, thinking about very many other things. But once you understand how markets work, once you understand what makes people fail, I think it's easier for you to understand how people make money in the markets.
Yeah.
And some of the reasons why people fail are clearly outlined in some of these books that Lavi talks about. I think we've done a very, very in-depth analysis of trading from our own perspective. We've read many books trying to understand how markets work, what gives you an advantage, what makes you a loser, what can make you a winner. And we have discovered there is so much research that has been done in the markets. And beside the research, you really need to go back into the markets and have the necessary experience of trading a bull market, a bear market, a consolidated market. So
testing your own psychology,
improving your own psychology. It's not a game that you'll just wake up one day and you start making big amounts of cash or you start managing big amounts of money. No. That's not how markets work. Markets work in a very, very, very different way. And once you understand that, that's when you, I think, stand a chance. Don't believe in these brokers who tell you that, what you need to do is to just attend this 3-day course, open an account and start buying moving averages. You don't know how to manage risk. You don't know how to manage your psychology. You don't know why markets are even moving up and down. You don't know how to do your top-down analysis. Like, you're missing out on so much, man. And once you're missing out on all these things, and you can imagine you're trading against Ken, who knows all these things, or Lavi, who's invested so much time in understanding some of these things, then there's a high chance all your money will be taken by someone else. So investing the necessary education in understanding how to invest, because I believe trading is about investing. It's understanding.
Actually, trading is a form of investment.
Yeah.
Then gambling is never a form of investment. You see, it's the worst form of speculation.
Yeah.
Because I had this point. It's trying to escape my mind, but let me try and remember it. Exactly. I think the main reason why people now judge trading as gambling is because of the failure rate.
Okay. Yeah. That's true.
Like globally, it's known. Even ukienda hapo kwa broker wako wamekwambia 95%
Lose
of
money.
people fail.
Mm-hmm.
In gambling, 99%
Mm-hmm.
lose money.
Mm-hmm.
So they think that fact that it's more
There's
about
a
losing money, like
There's a very high chance you'll
you
lose money.
money. People just see it as a gamble, but they don't know that that statistics is flawed.
Yeah.
That statistics is for people who
just join the market.
Yeah, who
There's
didn't
someone
know
who
exactly
opened an account.
who opened an account, who didn't know how to trade, who didn't know how to manage risk,
and started trading.
Yeah. But if I always say, just take the top traders, kina Jim Simon, Ray Dalio, put a 30-year track record. Uniambie ka failure rate yao iko high.
Iko very low.
They are very, very successful traders.
Yeah. And also, I think it's also important for people to understand how long it took these people to understand markets.
It takes
because I also like Jim Simon's invested like 13 years for him to start making money consistently.
Yeah.
So he was speculating.
Even to just know what works for you, because at first he was a discretionary trader, just then, trying to buy stocks here and there. Then it didn't work. Then at first he started a small he put a small it's a program, but it was not so sophisticated. It was just a loan. I was two of his friends.
Yeah.
The program was not so sophisticated, so he quit again. Then he didn't give up on the idea that still he can automate this business, but he gave up first. Went back to work as a professor, then came back to markets again after things after computers started becoming more sophisticated. Like crunching data was a bit easier, so he came back now to markets after like 6 years again. You see, so it takes you so much time.
Yep. Once you understand that, it becomes easier, man.
Yeah, it becomes so easy.
So for you really need to know what gives you an advantage. Even for people who do so well in trading, I think it took them years, man. Like
true.
An average of about 3 to 5 years for them to be consistently profitable, to really understand the cycles of the market, to do your research. And that's being monomaniacal. You're not doing 10 things at a go. I think one thing I've also learned about trading is it requires a very narrow focus. Like you really have to narrow down on trading.
Laser sharp.
Yeah. For you to stand a chance to win at this game, I think you really need to invest a lot of time to understand how markets really work. You just don't wake up and just start making money consistently.
No, it doesn't work.
It doesn't work that way. There's a lot of pain on the way, but that pain is what eventually makes trading. Because again, once you are good at trading, I don't think there's anything that can match that skill.
I don't
personally.
So. Yeah. I also believe the same way.
I've thought hard about it. It's a very powerful skill. The ability to make $1.10 is not something that very many people have. Many people can create products, they can do things, but the ability to multiply money is something that very many people lack. Consistently. So if you have such a skill and the opportunities exist, I think you have power that many people don't have. And that's why we're championing for people to learn how to trade, because we believe it's a very powerful skill. And you learning how to trade does not interfere with me making money, because the opportunities are endless.
Yeah, true.
And like many other businesses where the more people join, the more the opportunities are limited. In trading, the more you join, the more the opportunities exist, because there's a lot of liquidity in the market.
Yeah.
So obviously we'll have dumb money and we'll have
smart money.
So you have to really decide on which side of the bracket you lean on for you to start making money in the markets. So yeah, I think those are some of the things that I personally think differentiate trading. And also the element of risk management. I think very many gamblers don't think about managing risk. That's why for such a person who had $50 to 40 million, that's a person who never thought about managing risk. And that's why he made so much money very fast. But just like you went up, you came down. Yeah. So the same applies in trading. You can make a fortune very, very fast. And we've seen people do this. Like we saw someone come to the office with he had traded from about 1,000, 300,000, I think, to about 4 million, right? But he lost it all.
Yeah, in very few trades.
We also saw someone trading from about 60,000 to about 700,000. He lost it all. The fact is, as long as you don't know what you're doing, and that's why I said at the level of one trade, at the level of 1 month, you can be lucky. But once it comes to trading for 6, 7, 8, 10, 15, 20 years, you really need to be skillful at it. Otherwise,
true.
You'll keep on losing money and you may never stand a chance to make any money in the market. So think hard about trading and think about why you should invest a lot of time in trying to understand trading. The earlier you start, the better.
Yeah, true.
That's another thing.
The better.
So I think many people who are joining probably Now, this is advice for people who are joining school. You've just cleared Form 4 and you're joining school. This is the ripe time for you to invest time in learning a skill.
Yeah, true.
Yeah, because that's
Especially
the
such a
same
skill like
time we
trading,
started. Yeah. Because I remember we started like a year after high school or
Yeah,
something.
initially, I remember I started just after high school.
Just after high school, yeah.
with
So
binary option stuff.
and
Just after high school.
exactly.
Like
So
that
me, I remember
December
for the whole
holiday.
year I was not doing anything constructive. Then after that, I learned about trading, and I narrowed down on it. And I think that's the only reason why we've been able to gather so much in such a short time. If you're old, we're not saying you can't make it, but the odds are highly stacked against you again.
Yeah, true.
So it's very hard for you to narrow down your life and learn how to trade and become proficient at it. It takes a lot. So learning how to trade is not something that will just come easily to people, especially if you have other commitments. And I think also we've said this a couple of times. If you have a plan B, it's hard for you to succeed as a trader.
Yeah, true.
There's a high chance you'll narrow down to the plan B. You only need a plan A, and the plan is to make money consistently. And you go through as
And you
much
stick with plan A
pain
for
as possible.
as many years as possible.
Exactly. For you to
Plan A has to work.
ukishaanza kusema hey, unajua plan B iko hivi, plan C iko hivi. But I think that's more of life. If you go into a war with 3 plans, and there's a high chance you won't win. But if you go into a war with 1 plan, then there's a high chance you will win in the markets. So I think we'll stop there.
Yeah.
I don't have anything else to say from that
Caleb has
perspective.
not been around, but he'll be here on the next podcast.
Yep.
So you'll see him back. Maybe most of you guys have missed him. He says he's most interesting and yeah, Caleb vibes has been missed. So he'll be back soon. Next episode he'll be there.
Yeah.
So look out for that also.
Yeah.
I hope you guys are enjoying these episodes. Also, we'd love for you to suggest topics for us to talk about.
Ask questions.
Yeah, ask questions.
I was thinking we could have one episode where we're just answering
questions. Yeah, exactly.
So drop your questions in the comment section below.
You can also send the questions to our email, thefinancialhub2@gmail.com, or to our WhatsApp, 0769 001272, 0769 001272. So send your questions there, and we will be answering them on our next podcast. And hoping, we grow this community to levels of Wall Street. So, and even better, Black Wall Street.
Yep. On the 20th, we're launching a new website. So
yeah,
if you're wondering about what we've been working on, we're still working on new products. So we're launching a new website, a new course, and a new Discord community. So we are moving from the friendly communities whereby people chat on WhatsApp and Telegram. We're moving to a more professional-like community. So if you don't have Discord, look for Discord. That's why we'll be posting much of our stuff, the trades we take. Some people have been asking us to share the trades we take. We do share them on our Zoom sessions every Monday, Wednesday, and Friday. We normally have a Zoom session from 10:30 a.m. That's just 30 minutes after London Open, all the way to about 11:30. But now we will move all that to Discord. So much of our communication will be happening on Discord. And hopefully you guys will join and keep track of what's happening on that space. We'll be sharing a lot on how you can navigate the markets, how you can learn the markets, and what you really need for you to succeed as a trader. So I think we'll stop there. We'll catch you guys on the next one. Peace.